Hello, retail traders. Well, it is Sunday. Today's date is March 6th, 2022. There's a war going on in Ukraine and Russia right now. I think it's a slaughter. I feel for the people in Ukraine right now, very much so. I know there's more we can do about it, but we're not getting it done. So, right now that's going to be part of the volatility in the market. I do believe that the Feds are coming up here next week, not this coming week, but the week after. So the market's going to be volatile for that too, and probably hold a position on sideways pattern, maybe pull back and kind of just gradually hold a position, create a Darvas box. So that's what I'm looking at. I'm looking at two things that are affecting the market: geopolitical and plus the Fed meeting. And I know they're going to raise rates at least a little bit, and there'll be a little bit of volatility on that, and I think it'll bounce up right back to where it was. So we could be creating some kind of resistance here, creating a support level and just kind of leveling out. March is usually a good month, but it hasn't been that way. We've had the deal with the war, and we've had to deal with the high interest rates that are going to be coming in, plus the high inflation rates, and just a lot of the State of the Union's not that good in my opinion. It could be a lot better. So let's go ahead and look at the indices. I'm kind of, like I said, we're going to be volatile, bullish and bearish at the same time. Just follow the trends. These are the year charts. We got the IWM, the QQQ, the SPY, and the SPX. They all relative have the same kind of pattern. The IWM created new year lows. We're getting down to the lows on the QQQ on the year. We still have some room to get down to the lows on the SPY if she decides to pull back. And that's the same thing with the SPX on the year. We're going to pull up a bigger chart. And I think that one will do. Bring that down, give it a little bit more room. We're going to move these on the 3-year. MULN, I'll be watching that one for a reversal. That's for sure. We'll start off with the IWM. Oops, that's the IEM. There is no IEM. So this is the 3-year on the IWM, looking at 3 years. So we still have a long ways to go if it needed to. That 200 is right there at 173. That first support, these are weekly candles. This is a 3-year weekly time frame. That lower support's right around the 190. I think right around 194.35. Somewhere in there. Let's try this again. We'll magnify it up, is what we'll do. We'll try to get more precise with it. 194.09. Boom. Right there. Perfect. And that next support's going to be right there. 197. A little bit under 197. So that needs to hold. So there's a support right here too, and we're going to go ahead and put that on there right there. And that'll be your first one. We'll take this to the weekly or to the daily. Kind of look at it and see what we see on the daily. Pretty strong with those 3 supports. We'll go ahead and make this the 3rd one with a strong buy at 194 if it does pull back to that area this week. And the resistance I think to break, that we're going to have to break this week, is going to be yeah, I'm thinking right up in here somewhere. Right around 287. 287. If we can bust past that, we'll go higher. If not, we'll pull back to these other support levels. This is the IWM. You can stop this at any time and write these numbers down if you want. Lowest possible 194 to hold. We get the 196, 197, and then that 198.34 for your first one. And then resistance long at the $200 mark. And it needs to break 199.45 come Monday. And that's the IWM. The QQQ, real nasty day on this day when that thing pulled back. And that was pretty much almost right down here to the pivot point area, which it was. That double bottom right there. I'd almost call that a support area. And then we have this spot right here at 329.76. And we'll put that right there. And then you have that resistance that we got to break at 341.39. So definitely be watching this one here. This is going to be your first support to hold at 335.07 period. 335.07 to hold. If not, we'll go down to 329.56 maybe. And resistance to break is going to be that 341.39. And then you got the SPY. Same kind of action almost. And the support levels right now is what we're going to keep it at, is going to be right around 428.69. That needs to hold. If not, she'll drop down a little bit farther to this other support level at 425.40. Now I do like the resistance to break, and that's going to be right here at 433.07. If you can get past 433.07, the next resistance is going to be right there at 436.58. Then that double top long up here at the 21, and that's on the daily. And then the last one is the SPX. My nose is itching awful bad right now for some reason. So we've got support level, I'd say on the SPX at 42.98.81. That needs to hold. If not, she might drop on down here to this other support, and that's no lower than 42.59.43. We do have a hammer. It's got to get above the 9. If it does that, then this is on the daily. Then you could see up here right around 4400.01. That's going to be the SPX. And she's going to have to break a couple resistance levels on the way up. For example, right here. Boom. Let's see what that is. That's 45.51.97. So your low support, 42.59.43. Your next support, 42.98.81. Then the resistance to break, 43.51.97, all the way up to 44.01.20. That's the SPX. So it's going to be a matchup between the bulls and the bears. I think they're going to be pretty much even. You might have a little bit of leadway on the bears because a lot of people are bearish in this market. But let me tell you one thing, the fat cats do like to buy on geopolitical news. They do know the rates are going to be coming out in a couple of weeks. They already expect a rate increase. So, I think they're going to start buying the dip. They're wanting to buy the dip. It's just the geo news got in the way of them buying the dip in March. So, bullish bearish this week. Watch the trend. It'll be your friend. And have a great day. We'll see you tomorrow.